So what we're going to discuss is this big Alibaba listing and what really it means to the world of e-commerce and fresh listing of e-commerce stocks or even listed e-commerce stocks. Clearly, the man of the moment in India would be Rohit Bansal, co-founder and CEO of Snapdeal.com. He joins us now. Also, we will be joined in a bit by Henry Guo. But Rohit, thank you very much for joining us. Alibaba listed at, now we know, nearly 40% premium to its issue price, commanding a market cap of what, $220 billion. Is this once again a case of investor over exuberance, which will get watered down like in Facebook?
Actually, I think the Alibaba IPO is a great event in many ways for us. Because the way we think about it is, it validates two big things. One big thing it validates is that, Alibaba is a company from an emerging market like China, and it's one of the top 5 technology companies, or one of the 5 largest technology companies in the world now. So this gives us a lot of confidence that large technology companies can come out of emerging markets. We're seeing that trend coming out of China right now. And we'll soon start seeing that trend coming out of India as well. So that's one thing which is very good about this IPO. And the second thing is, we've been big believers in the marketplace business model of e-commerce, and this to a very large extent validates our belief, which we and our entire team has held for a long time, that you don't need to own inventory as an e-commerce company to sell. And a pure marketplace, which is essentially a technology platform connecting buyers and sellers, you can build a very large, very profitable, and very successful enterprise out of that. So we are extremely excited about this event, which has happened. And congratulations to the Alibaba team.
So we actually were more excited at the thought of some of these unlisted players commanding that kind of premium if and when they list. But how do you really value these e-commerce companies now, as we don't have any precedent in India to value them?
That's a very good question. Now, one of the most important things which are unique to technology companies and specifically e-commerce companies in growing markets is that, these companies see an extremely different growth rate as compared to more mature industries. In most mature industries, 10, 15, 20% per annum will be a huge growth rate, whereas in technology and in e-commerce, it is common to see growth rates upwards of 50%, 100%, etc. And as a result, the traditional way of thinking about valuation may or may not be the right way to think about these things, because the forward-looking scope of growth of these companies is huge. For example, in a market like India, e-commerce today is, just 0.3, 0.4% of overall retail in India. Whereas if you look at any developed market, e-commerce is anywhere from 6 to 13%. Our expectation is that the same is going to happen in India, because the fundamentals of e-commerce are very strong. And even if retail does not grow over the next 5 years, we are very confident that e-commerce in India is going to be a $60–70 billion market. And as a result, the front-running players in e-commerce are the ones that are best positioned to capture that market.
Okay, well, Rohit, how long, first of all, does it take for an e-commerce company to break even and report profits? We haven't seen that in many companies in India.
So, I think e-commerce is it's no different from any other sector that way, because the growth rates in e-commerce are very high. But at the same time, similar to what happened in, let's say, in telecom or in retail, it takes building a lot of infrastructure to be able to support that growth. And in the very early days, a lot of investment goes into building technology for e-commerce, building supply chain technology, building the core infrastructure which can support e-commerce, which consumes a lot of capital. But as the business size keeps growing, for us as a company, we are profitable sort of at a transaction level. But there are expenditures that we do, which are investments that we make to grow infrastructure and build technology. As the business size starts growing, the profits that we generate out of the business start surpassing the investments that we need to make, and as a result, the company becomes profitable. So it's really that simple, and I think it's important to see that from that from that time frame in mind, knowing that it's important to invest in infrastructure and technology today, without which e-commerce at scale cannot be supported.
Okay, those are some very interesting points you made, Rohit. So I'm going to get Henry Goes, Senior Research Analyst at JG Capital, who joins us on the phone line to give us his estimates. Henry, hi, good morning. Snapdeal believes that from the current $3 billion that the online retail market is worth in India, it could grow to $60 to $70 billion per year. Is that the kind of estimates that you have as well for the emerging market online retail space?
Definitely. In China especially, we see huge potential there, especially when the mobile internet penetration continues in China. So people, especially in the third and fourth tier city, they haven't used the computer, the PC, but they use the mobile device directly, and so make online transaction from mobile device that really drive the e-commerce, the penetration in China.
Okay, Henry, a couple of more fundamental questions, which we also asked actually Snapdeal. How long does it take for an e-commerce company to break into the black? As well, will that period go on increasing? Because as there are more players, they have to spend more on advertising, isn't it? To simply be heard across the clutter.
Exactly. So several players in China, especially maybe you heard of JD.com. So it's a leading B2C player over there, still inactive, over there. So the company has to spend a huge amount of money on the infrastructure, including the fulfillment and the logistics delivery. So those kind of, very money take a lot of money to really build up the foundation there. But for Alibaba, it's a little bit different. So Alibaba using pretty much depending on the third-party infrastructure to deliver the merchandise to consumers, to really save a lot of money and the capital expenditure over there. Yeah.
Henry, for our viewers who are watching the channel now, they're very interested in the potential that the Indian market has. So if you can give us any sense of that, is there a lot of interest from venture capitalists into Indian e-commerce, the likes of Tiger Global, SoftBank, etc., that have interest in Alibaba? Have they expressed any interest into the Indian e-commerce business as well?
I think definitely. I think the population over there and the potential, the online e-commerce, the potential there. Definitely, I expect the venture capital and also the financial deep pocket guys will expand into Indian market. So that's Alibaba. Jack Ma mentioned. He believes the market like Brazil and Russia has huge potential, but similarly, I think India has a similar potential there longer term.
Okay, a final question. I don't know how deeply you study Indian companies, Henry. Here there is a bit of a reluctance to use your credit card on the net itself. But Indian e-commerce companies have very neatly sidestepped this by accepting cash on delivery. A model that works because labor is cheap in India and therefore delivering it to the house through riders and logistics companies is not that expensive. How will you rate Indian companies? Will you also give them 70 times? Or, like foreign companies are getting, or would you wait to see them make profit?
Actually, in China, it's very similar. So even now, they still pay by cash. When you deliver something, pay by cash on site. It's a major, payment transaction there, and it's very similar. So some people still don't want to spend using credit card to make transaction online. So, but still, gradually, I see the trend is there. Longer term, still I see potential there. So longer term, I still believe the potential in India is huge in terms of e-commerce and the online shopping growth over there.
Okay, well, let's go back to Rohit Bansal and get one final question on what the potential is to, for some of the Indian companies. Rohit, do you think India has the potential to produce a $100 billion company, say in the next 5 to 10 years?
Absolutely, 100%. I mean, if you look at countries in South Korea, already 14% of 14% of their retail is through e-commerce. In China, it's already 9% of their retail is through e-commerce. There is absolutely no reason to believe that in 10 to 20 years in India, e-commerce will be anything less than 10% of retail, by which time retail in itself will be $1 trillion market. So there is absolutely 100% possibility of creating a $100 billion e-commerce company out of India.
Wow, that seems like a dream answer, Rohit, for many Indian entrepreneurs who are waiting to enter the space.
It used to seem too ambitious to us as well a few years back, but going by the growth rates that we are seeing more recently, it doesn't seem unreal.
All right. You mentioned Spandil has grown 600% last year. What kind of projections are you working with for the next few years?
It's a very tough question to answer. Honestly, if you had asked us 1 year back, what kind of growth do we expect? Our answer would definitely have been lower than 600%. We ourselves are quite surprised by the size of the market and the way the market is growing. So we have some estimates, but they're definitely going to continue to be in the 3-digit percentage numbers for the next few years.